Welcome back to Explain the Charts. Today, May 13th, 2025, we're dissecting NZDUSD. We're combining fresh news and in-depth chart analysis to give you an edge. First, let's cover recent headlines. News from FXStreet suggests NZDUSD is trading near 0.593, impacted by dollar strength and global trade. The Trading Economics.com site also indicates a recent increase to 0.5909, and we'll consider this when looking at the charts. With potential trade deals influencing demand, according to investing.com, let's see how these events correlate with our chart data. We'll begin with the daily chart to give us an overview. As we can see from the chart, there's been a general trend upwards over the past few months. However, there's a lot of chop, and we need to be careful when reading this data. Let's zoom in on a specific range to look more closely. Here on the one-day chart, we can see consolidation around the 0.60 level. There seems to be a resistance at 0.613, which might be important to note. Now, let's switch to the hourly chart for a closer look at recent price action. We can see increased volatility, with price swings testing support and resistance. It seems we're trending downward a little, but with lots of volatile candles. Let's filter these results a little more to get a clearer picture. Here on the hourly, we can see the most recent volatility. It seems we are trending downward, and perhaps the earlier 0.5909 Trading Economics.com indicator is correct. If we are to break much lower, this could indicate a bearish downtrend in the short term, but let's see if the daily chart supports this. Switching back to the daily chart. On the daily chart, we can see that the 0.586 level acted as support on May 12th. If that support can hold on the hourly, there's a possibility the downtrend could end there. Let's look closer at the 15-minute chart to see more granular detail. From this range of candles, it appears that 0.59 is acting as immediate resistance, at least in the very short term. Looking at the 15-minute chart, it's difficult to see what is truly happening, but 0.588 support is the most obvious near-term target. If we break through that on the hourly, we should be very bearish. So, to recap, watch for a break below 0.586 on the hourly chart. If that fails to hold, look for a test of recent lows in the 0.54 to 0.56 range on the daily. Conversely, if the price can sustain above 0.59, we might test the resistance at 0.613 mentioned earlier. Remember to combine this analysis with your own research and risk management, and as always, trade safely. Thanks for watching Explain the Charts.